Hey, welcome to the channel. I'm going to go over some trades that were done today. And what you're seeing is the order flow bars indicator. I'm putting together the website. Everything should be done by this weekend. And I should have it up and running by next week so people can start supporting it and downloading it, using it. And let's go over some trades. This right here, let's go back to the beginning of the morning. Let's go over here to about 9:30. Okay, so about 9:30. Now, what this is now, the yellow and the blue line, that is a Heiken ASCII smooth line for like a 9 period. That just gives me the direction of, hey, you want to be in the right direction of the market. So the order flow bars indicator, what you can do is right here, as you can see right there, you have some persistent buying. And what it does is that it shows you the stacked and balanced areas. This is not a footprint chart. The order flow bars indicator works on any chart type. Uh, and this is for NinjaTrader. And also we have the green bubbles. That just says that there's a large order that got executed for like 30 or more contracts. And of course, if there's a red bubble, that means that there were 30 or more. There was a contract of 30 or more contracts that were executed. And then you have the little dots here, the blue dots. That just means there were between 20 and 30 contracts executed. And the yellow dots right there, that just means that it was 20 or 30 contracts that got executed. So, and also these green lines right here, this is a stacked and balanced area right here. I'm doing 5 times with 4 stacked and balanced just to show one green line. Now there has to be a double stacked and balanced area. So there has to be 8 of them, and like for one line, there at least has to be 2 lines. There can be 3, but there at least has to be 2 lines in order for it to show up. That's just how I've coded it for right now. You'll be able to choose whether you want to do that or not in the preferences. Let's go over to preferences for the order flow bars. The smooth hike and ASCII, that just tells me, hey, I want to go over the smooth EMA period for 9. What that does is that takes a Heiken ASCII chart and it kind of blends it together with the open and the close, and then I use the EMA to smooth it out. I read some papers on some high frequency trading, and a lot of institutions were starting to use the smooth Heiken ASCII. And then we have the order flow bars here. We have show big trades. Yes. Now, big trade 1 is like 20 contracts. So those are the little dots, the blue and yellow dots. They are between 20 and 30 contracts. And big trade 2 has to be 30 or more contracts. Now, that is for just one trade. That doesn't mean like, oh, there was 5 contracts with 6 trades. No, it just means that there are 30 or more contracts that got executed in one trade. So that just means that there's a big player that is executing order. And then I have show exhausting area, show imbalance area. You can show the point of control. That's just going to be a yellow dot on the candle chart. And then show persistent area. That just means there's persistent buying, and show delta text, which is down at the bottom here. So right in the open, you really don't want to be trading the first 5 minutes. I try not to trade the first 5 minutes because there's a lot of up and down, up and down. As you can see here, we had a large buyer, 30 or more contracts. They got executed. You had a triple and bounce area, and you would think that we would go up, and we just kind of spiked up for about 10 points, and then we just kind of sold off. This is a 60 range bar chart just because the ATR is kind of high in the morning, and I use between 40 and 60 range bar. It just all depends. So we kind of chopped around, and then around a little around like 9:33, we had a double stacked and balanced area, and you could have gotten in on the break there, and then you could have gotten in there and maybe got out here for about 10 points. You're not going to get the whole move. Maybe you get half of it. I mean, the whole move was like 20 points. So maybe you can get about 10 points for one contract. was like $200. So then we kind of sold off right here, and then we got to the bottom here, and then you had one buyer that had between 20 and 30 contracts that got executed in one order, and you could have rode that up if you wanted to. I didn't do that. But what I did do was I did not get in on this stacked and balanced area just because the smooth Heikin-Askey line needs to be separating like this in order to have a really good upward momentum. Now, we did have a stacked and balanced area right here. Right here, we had a stacked and balanced area. And then if you look to the left of the chart, we had a persistent buying. So there was persistent buying, someone executing for every tick, they were executing like 5 contracts, just continuous. So that was persistent buying. So what I did was I went on ahead and got in right there as soon as it opened up. I got in. Now your stop can be down here if you break the stacked and balanced area, or you can go to the low of the 60 range chart. For one contract, that would be like $300 stop out. Now, once we started running up and you got this pop right here, you see this persistent buy-in. Once that persistent buy-in starts coming back down, you get about 15 points out of that. Because once it pops, you see that persistent buy-in. Once you break that, the momentum is gone and you just go ahead and get out. I mean, you could have gotten like 10, 15 points out of that. Now, we had some large buyers right up in here. I do not buy the top when they're large buyers up here. Maybe later on, if we try to break that area, maybe. But I like looking for them down at the bottom or in the middle of when we're moving up. Now, the smooth Heikin-Askey lines kind of crossed over. And then we had some more trades right here. You had a stacked and balanced area right there. That was kind of wide. That was a little wide. Just like this one right here, you had a stacked and balanced area that was here, and then you had another one right here. That's like 9 points away from each other. That's really not ideal, but you did have triple stacked and balanced area right here, which was pretty good. So if you got in on this bar right here, and then you come up and you can get out for about another 15 points. That's what you want to do. You just want to get in and out. Just get your quick scalps, 10, 15 points, and then you get about 20, 30 points and make yourself like $400, $600 for the day and just be done for the day. Or if you build up your account, let's say you build up to like $500, $600, then you can go ahead and just keep trading, but don't give back all your profits and then go negative. That's not what you really want to be doing. We started moving down, and we were below the VWAP, so I really didn't trade the stacked and balance. I did trade this one because we kind of crossed over, and I was like, okay, we could probably get up into this area. So this was a nice, I think it was like an $800 trade. So I got in here, and then once we started breaking this area and we saw that large seller right there, I just went ahead and got out for about 40 points. That was a nice $800 trade. And of course, the stop could have been down here below the last stacked and balanced area, or the low of that 60 range bar. And then we just kind of ranged around, and I didn't get in this at all because we're just ranging back and forth, back and forth. You really don't want to be taking this one either because you're in a range. So you want to be taking when there's momentum up. You're not going to get the whole move. I was lucky and I got this move right here. Most of the time, I'll just get like 25, 50% of the move. If I get 25% of the move, I'm happy. Okay, so this one is a good area. Once I started taking trades, I started putting notes on the chart. This right here, we had a 2x stacked and balanced area right here. So you can get in on entry right here, and then your stop is below here. Now, we popped up and then we kind of sold off, but then we took a slight bit of heat right there, not very much, and then we kind of started moving up. So once you start moving up, and you got a large buyer, that means, hey, go ahead and sell. Or if you see a large buyer, you can go ahead and add to a winning trade, and your cost average probably be down here. Go ahead and add to the trade, but I got out. I exited. Once I saw that seller right there, it was about a 30-point move. Once I saw that seller right there, that yellow dot right there means there's 20 to 30 contracts in one execution. So that's a large seller. Once I saw that, I went on ahead and got out. And then once we got out, then we just kind of popped for about another 20 points, I guess. I don't know. Yeah, about another 20, 25 points. So I left a little money on the table. Who cares? You're not going to get this whole move from here to here and get yourself 100 points. But can you go from here to here and get yourself 30 points? Yeah, why not? You're not trying to shoot for the moon and get the whole range. You just want a piece of the pie. That's all you want is a piece of the pie. Get your base hits and move along. Now, once we started basing up in this area right here, you see large buyer, large seller, and large buyer. Once you start seeing these buyers right here, and then we started drifting down. This right here, large buyer, then we had the blue dots right here, 20 to 30 contracts. So those were two trades with between 20 and 30 contracts. Then you had a stacked sell imbalance. Now, if you get in here on this stacked and sell imbalance and you're trying to look for it to move down to here, that's great. But what you need to look at is this area right here. You had a stacked and balanced area. It was kind of wide, but you also need to look to the left and you see large buyer, large buyer, large buyer. And look what we did. We came down there and then we just kind of bounced around. Now, we did drift lower, but we just kind of ranged and we just ranged around. Okay. Right here, once you start ranging like this, going back and forth, I just do not trade. I don't want to deal with it. I do not trade. But once you look at this and you say, okay, I'm looking to the left, I've got a support area right here. We come in here and we kind of bounce off it a little bit. But the Heikin Askey smooth line, that right there is separating. So that's telling me the momentum is downward. And plus, we are moving downward, but we had a little support right there. Now, what you want to really look for is right here. You had a blue dot, 20 to 30 contracts for one order. Then you had 30 contracts for one order. So that was a large buyer buying off of this support area. Now, that large buyer did not get rewarded. We moved down and then we broke and kind of sold off. So what you can do is that you can get in here. Once we move down to here, once you get about 20 points, 10, 15 points, what you can do is if you got 2-3 contracts, you can sell one and then, or two of them, or half. If you got 2 to 4 contracts, sell half, move to a break even, and then we just kind of drifted down. Now, if you did hold into that right there would have been like a 30, 40 point move. I mean, that's a nice trade. But what you're looking for here is you're looking for trapped buyers. This right here, you've had 20 to 30 contracts, then you had 30 or more contracts right here. That was a large buyer with 2 trades that happened, large buyer. The problem is they did not get rewarded and we broke down. So if you're holding 20 to 30 contracts and we start selling off like this, are you going to hold it? No, you're going to get out more than likely. I know I would. Or maybe as a large institution, but I do like to trade trapped buyers and sellers. Okay. So then we kind of sold off and we got a little bit off of that trade. That was good. Then you had a large buyer and we kind of moved up. No stacked and balanced area. So we kind of had a nice balanced day. It really wasn't much going on. Now, right here, we had a large seller and then a green candle. Yes, you could have try to get that pop on that move, but we're below the Heikin Askey smooth lines as well as this buyer right here. So I really don't take those type of trades, but what I do take is something like this. See, something like this you're not going to trade because you're moving down. Okay, you're moving down. A buy, well, if we had a sell order here and we broke down, that's fine. But let me show you what the A+ setup for a trapped buyer will look like. Right here, large seller, 30 or more contracts in one trade. So that's a big dog trying to short 1X large seller. Okay. Then we moved up the Heiken ASCII lines, the yellow, which is the which is the current price, and then the blue is which is the closed price. That right there is separating. So the Heiken ASCII is starting to move upwards off of this consolidation. You had a large seller. They got trapped. We closed higher. So you enter right here, and then we moved up, and then we started selling off. And then right here, I just got out because we were breaking for 18 points. Okay. So that's an A plus setup where you can get yourself a nice 10, 20 point move. Okay. Same thing here. We had a large seller right here, but we're kind of moving up at the top of the range, and we're right up against this area right here. So that's not ideal to take. Okay. That's not really ideal to take. And then this right here, large buyer, but the Heiken ASCII smooth lines are separating. We're moving down. Yes, you could have gotten yourself a nice move. On like how much, I don't know how much that would have been. That probably be around 15 points, but I just didn't take it because it's not ideal. So if we kind of move along, the indicator I wrote kind of keeps me on track of what I want to do. Now this right here, we had a consolidation area, and then we broke. We had a large seller, large buyer, kind of a buyer right there. It looks like they got trapped. Then we had another buyer right here, but we sold off, and we had a seller right there. So you jump in right here, and then you have this area right here. Once you start breaking, then you go ahead and get out for a nice 20-point move. Okay. Once you see that large buyer, you really, if you started moving up and breaking that, and then you broke this right here, then you need to go ahead and get stopped out. Okay. Also, right here, we had a nice move upward. We had a lot of large sellers right there. You had like 1, 2, 3, and then some buyers. So there was a nice little battle going on right there. What you could have done is gotten in on the break of that high right there, and you could have rode this up into this area for a nice 30-point move. Okay, large seller, and we're moving down, but we're kind of trending upwards. You really don't want to be taking that. This area right here, I got stopped out on the short, and then I got rewarded on the short because I looked at this whole area right up in here. And what we have large buyer, 2 large sellers, and I think a small seller. And then you had a buyer, seller, large seller, large seller, large seller, large buyer, large buyer. So it was a nice auction going on. But once we broke this area right here, where this large buyer was, all these other buyers that are holding, they're going to be underwater. And I went on ahead. Once we broke this area right here, we had a nice red candle. We had 2 large sellers come in, and then the 20 or 30 contract sell order come in right there with that yellow dot. So once we broke that, I got in, got rewarded a little bit. Then we kind of moved up. Normally my stop's up here, but I really didn't want to be going back up into the range, so I cut my trade. So I cut it. I took my loss. I mean, how much was that loss? I took my loss. It was like a 10-point loss. And then we kind of ran up here, and then we went in again right here. The lines are really separating, so I'm thinking, okay, we are moving down. So I tried it again. Once we got here, I tried it again right here. And then we rode down, and then I took a 25-point trade because got in here, and then once we started trading up, we broke that high on the 60 range bar. I went on ahead and got out. So that's how I use this order flow indicator. That's how I use it. Also, I want to show another great A+ setup for trapped buyer. Bro is on the wrong side. I just put a little text there. Bro is on the wrong side. You had a large buyer right there. I think that was 2 large buyers. So that's 60 contracts going long. Okay. I don't know if that's the same order, but it's 2 orders with 30 plus contracts. And we closed down below it. We are trending downwards. That big seller, we got 60 contracts are on the wrong side. When we start moving down I mean, 20 points, you're underwater like $24,000 when you're holding 60 contracts. So I went on ahead, got short right here on the break of that. Once we come down here, we got a nice little trade. Once we started trading back up, we got a nice buyer that came in here, and we started trading up, and then I just went on ahead and got out for a nice 20-point move. Okay, so that was a nice 20-point move. I mean, you get 20 points, and I mean that's like $400 on one contract. You get about 5 trades like that. You're looking at a $2,000 day. Okay, so that short worked out pretty decent, and then as we started trading more, as you can see here, we had another buyer kind of step in, but then they kind of drifted it down a little bit. I didn't take any of that trade just because I already took this trade, and I really didn't like this area that much. But we had some large buyers kind of step in right here, and if you broke this area right down in here, yeah, that could have been a nice little short. But what I did do, since I already had some profits built up, what I did try to do is I tried to catch a long right here. Now we had a seller here, and then you had two large buyers, and you had a large seller, large seller. So I was thinking if we broke this area right up in here, and we broke this seller right here, okay, which that seller tried to short, and what I did was I kind of got in right here, and then I kind of got out. It was like a break-even trade because I tried to catch along, okay, and it didn't quite work out. Smooth Hawk and ASCII lines were separating. Everything was good. Then we got another one. Large seller stepped in, did not get rewarded, could not take it down. And then we broke that. So what I did was I went on ahead and got in, and we got a nice little pop. Once we got that pop, I moved it up to a break even, and guess what happened? Got stopped out. Okay. And then I was like, okay, I'm done. I'm done. It's like 3:35. I'm done. Uh, it's starting to get close to 3:50, and I don't even want to be in a trade. Now, if I did hold the trade, if I took that heat, but I'm not, because you don't know if it's going to keep going. I went on ahead and got stopped out. But if I would have gotten back in on the break of this consolidation area, I mean, that would have been a nice little trade, maybe for 80 points. Not a nice little trade. That's a big trade. That's like a home run trade right there. But I didn't get it because I was like, I'm done with this. And then it just popped and moved. And I was like, all right, whatever. You're not going to always get them. But I ended up the day green. Everything is good to go. All right. So, and then we got a nice big, huge pop. And I just closed it out for the day. And that's all we have. Now, this indicator is going to be released next week. Hopefully, I've got the site. I just need to enable it. There's just something I need to fix real quick, and then we can go ahead and get this out to the public. So make sure you like and subscribe, and the indicator should be ready for download about a week after this video. That's all I have. I will go ahead and possibly try to do some live streaming next week and show off the indicator more. That's all I have. Later.